Hi friends, I am Nisha Lino. In this video, I am going to talk about emergency tax annulment. In some situations, income tax and USC can be deducted from your payslip at emergency rate. To avoid this, you have to make sure you given your PPS number to your employer and your job is registered with revenue. Usually the employer registers the job with revenue and you can check that online by using your My Account Payee services, and you can add more job details or cease the job by using the same. So once you sign into My Account, there are 4 options on the left hand side. So go to the third one, manage your job and pension. While you click on that, you can see which job is active for you, and if you want to cease that job, if in case you are not doing that job anymore, you can cease that job, and if you want to add more job details, you can add the job details. Once your job is registered with the revenue will issue a revenue payroll notification to your employer. This revenue payroll notification, that's also called as RPN, that will tell the employer what should be your tax rate band, tax cutoff point, tax credits and the USC band. So once the employer have the RPN, they will issue the payslip based on those details. And this RPN can be cumulative basis or week 1 basis. If it is cumulative basis, the amount of tax and USC that you overpaid will pay back by your employer by the next payslip automatically. So you don't need to do anything with that in that case. And if the RPN is based on a week 1 basis, then you have to contact the revenue and find out why you need to be on the week 1 basis, and you won't get any payback until your tax RPN change into a cumulative basis or until the beginning of the next year. If you have to be on the week 1 basis, for example, if you are on a long-term sick leave or on a maternity leave, then you have to be on the week 1 basis. Then you have to wait until the beginning of the next year. So by the beginning of the next year, you can complete the income tax return and request for your tax liability certificate. Then you will get all the extra amount of tax and USC that you paid in the last year. And in some situations, if you started the job by the end month of an year, for example by November or December, it may take some time for the revenue to register your job and to issue your RPN. So if it is issued only by January or February, even though it is a cumulative basis RPN, you still have to do the same procedure of completing the income tax return and request for the tax liability certificate. Then you get all the extra amount of tax and the USC that you paid. Hope this information was helpful for you. Please like and subscribe our channel. Thank you.